All right. So the question of the hour is, why is the stock market going up while we have millions of people that are unemployed? So it's sort of strange if you don't really understand what the stock market is all about. Um, right now we're in really dire financial situation right now, as far as the economy, as far as the job market, and the country in general. Right now we're going through some really hard times. um, so on a surface level, people would presume that you know the stock market should also be reflective of that. But let's start with the first fact. So the stock market's actually not doing very well relative to how we started this year. Um, Even though the stock market surged up considerable amount, we still have a ways to go to get back to where we the top of the cliff that we fell off of, right? So that's the first thing. If you were someone who didn't jump off the wagon like I did, early enough, and you dove down with the stock market, then your portfolio is still looking pretty bad right now. So that's number one. Number two, and I guess maybe this is what people are really talking about, is it's not how it is relative to how it was before. It's just the fact that it surged and we had some pretty good weeks or days recently. So fundamentally, the stock market represents a bet on future conditions. So it's how people feel things are going to be in the future, right? Let's say on a very basic level, you have a company you want to invest in. Then you're investing in a company because you're believing that in the future there's going to be growth for that company. So you're thinking that you want to get in now, buy low, sell high, right? You want to get in now while the price is low, and then the company grows in the future, and the price goes up, and you benefit from that rise in the price, right? So with that being said, what do you think is happening right now? People are trading as usual based on future tense. So I think about 2 weeks ago, 3 weeks ago, we were in a pretty extreme situation. Stock market was way down. Prices were way down. We were dealing with a global pandemic. I mean, we still are, but we were right in the middle of that, and we'd seen a lot of significant dropping of the prices. So at that point in time, it got to a point where um, a lot of people felt that the price was adjusted as much as can be expected for the conditions. So, in other words, the bottom, right? People, it's not going to go all the way down. That's what people are hoping on. So they look at the price and they say, okay, we don't think it's going to get any lower than this. So, with that being said, if the price is already at the bottom, there's only one direction for it to go, which is going to be up, right? Once you get to the bottom, the only place to go is up. So even though we're in a very bad situation, and we're gonna be in a very bad situation for quite some time, so it's not like you know, pretty soon everything is gonna be all wonderful. But the bottom line is, what's the trend line gonna be? Are things going to be worse than they are now? What is it, 20 something million people without jobs? We're in the middle of a pandemic. We don't have a cure, and there's no treatment for coronavirus. I don't think it's going to get worse than that, right? So things can only get better. So that means, just like a company, and essentially that's what people are doing right now. They're investing in the market. They're investing in the economy right now, because right now the entire country, the entire economy is hurting. So it's not like you're investing in a particular sector or a company, and you're looking at that company or that sector and you're saying, okay, I see how they are now. I'm predicting this can happen in the future. No, this is across the board, right? So the trades that are happening now are investments in the future of this country, which we feel, yes, it's going to be a continued bad time, but it's going to get better over time. Number one, most of those people who are unemployed will be employed again once we start opening up, right? That's one thing people miss. They look at the unemployment, and yes, that's bad for now. And people who need their money now to pay their bills now, that is pretty bad. But essentially, for most people it's temporary, right? So once they start opening up, businesses need people, right? So they're going to have to bring back on board the people that they laid off or whatever. So you're going to have a huge surge of employment. Now, a lot of people are not going to get their jobs back, unfortunately, because companies are going to go out of business. Businesses that are still in business are going to have decreased demand. If you're in like food service business, stuff like that, people are going to be afraid for a while. So you're not going to be able to have the same amount of people on staff. So there's going to be, a lot of people getting back to work. Many of them won't get back because again of the decreased demand. Maybe they get back initially, and then the decreased demand puts the business in a position where they're like, okay, we got to lay you off. But the bottom line is, even if let's say only half the people that are unemployed get their jobs back, that's a huge influx of cash, right? That's a ton of people that are going to be making money again. Therefore, they're going to be able to contribute to the economy by buying things again. Certainly not as aggressive as they were before, but this is economic growth. Small growth, perhaps, but growth nonetheless. And that is the point. You're investing based on what you see happening in the future. And right now, the future for us is growth. Now, relative to where we fell off from, it's going to be low, but the point is, where are we now versus where we're going to be a month from now, a month from that, and a month, and so on and so forth. We're going to be getting better and better. Um, However, with that being said, one warning that I will give you guys, I think I made this warning already. Um, the opportunity to take advantage of the surge that's happening from hitting the bottom and things starting to recover, you guys missed it. If you didn't already invest, you've missed it. Now, I'm not saying you can't invest now, but right now it will be very risky for anybody who's short term. The short term investors, you wanted to get in at the bottom, which I believe we've already passed. So, right now, to me, I only recommend long term. If you are looking to do a 1 year, 2 year, or even up to 4 years. Like right now, I'm on a 4 year investment trajectory, right? So my window is so far into the future that I'm pretty much guaranteed that I'm good. And I bought in so low that all the volatility that I know is gonna come it's probably not gonna touch me because I'm so again buying so low that I've already experienced, I think, a 14% gain. So we're not going to see a 14% drop anytime soon. So you're going to see days where they maybe like a 5% drop or 6% drop. I'll still be in the green. So I'm good for the short term in terms of my positions that I have already. Um, and in the long term, I mean, 20% gains, 30% gains, who knows? So just beware. I would not recommend any short term. There's going to be bad news, more bad news coming. There's going to be companies going bankrupt. There's going to be other negative events that are happening. So you're going to see, the market dropping and things like that. It's going to go up. It's going to go down. It's going to go up. So you're going to see a lot of that. So now is not the time for short term. Now is definitely the time for long term. People who can afford to put money away for, 6 months, 12 months, 24, 72. Um, and beyond that, my next move is going to be one of the ways that you can really multiply your money is you want to get stocks that are pretty cheap because let's say you're buying, stocks like me where I'm buying index funds. One share is like 270 bucks, right? So you're not gonna be able to buy many shares. So even if it goes up by $10, let's say you have two shares. If it goes up by $10, that's only a $20 gain, right? So that's really nothing. So ideally, you want to buy a stock that is cheap enough that you can afford to get a lot of shares. So therefore, let's say for example, you have 1,000 shares of something that is well, okay, so you have $1,000 to invest, right? So you get 1,000 shares of a stock that's only a dollar. Now, if the price goes up by a dollar, you gain 1,000, right? Because you have 1,000 shares, right, of something, and the share price went up by a dollar. So you've got to multiply $1 by how many shares you have. So that's $1,000 gain, right? So that's just to let you know how quickly you can gain a lot of money. So you gained $1,000 for $1,000 investment by just a $1 move. Now, if it goes up by $5, you're talking about $5,000 gain. Now, I picked a really cheap, that's like a penny stock type deal, just to illustrate my point. But the point is, you want to find something that's cheap enough that you can get a lot of shares, right? If you want to make a lot of money, that's going to be an essential strategy. You want to find something that is in the 10, $20, maybe $30, depending on your budget, something that you can afford to buy a large amount of shares and hold them for 12 months, 24 months, and just keep, riding it out. You're going to go through different phases of recovery. Companies are starting back, people are starting working again, the economy starts to expand, and between now and 4 years from now, I mean, who knows how many thousands of dollars you can make from the investment, and not necessarily investing that much. I mean, 2 grand, 3 grand, 5 grand, 10 grand. Um, so for me personally, I'm probably gonna look at doing something in the range of maybe 5 to 10 grand, on something that's on a smaller side, $20 per share, $30 per share, something like that. Just so I can get the real benefit of the any dollar increase of the share price. So I'm not really sure what I want to invest in yet. I was considering Asian markets. I'm not sure about that, because I know they're hurting uniquely. So might be some real discounts over there. But there's a lot of stuff happening globally. I mean, a lot of countries are unhappy with China. A lot of stuff is changing in terms of where people are buying, um, their products from. People are going away from China, so it's a lot of dynamics are changing. Um, but I'm gonna look for something that is a company that has a product that I know a lot about and has a really low price, and I'm gonna do my research, do my analysis, think about it. And one critical thing is I'm have to consider, and you have to consider, companies are going to be going out of business, right? Some big names. There's a major luxury clothing store that's already filing for bankruptcy. Um, I am hearing stuff about Verizon, not bankruptcy, but definitely downsizing. Put 2 grand, 5 grand into a company that ends up going out of business. So you want to be very, very, think a lot about the how the business has been run in the past, how smart they are, how they are with their money, how profitable they've been, and then try to think about how they would do in the future world. Future world is people holding on to cash. So I would definitely stay away from luxury, anything luxury. People holding on to cash. Maybe think about the types of things that people are going to be spending money more on as a result of what's happening in this country. So safety supplies, I don't know, masks, something like that. um, but you want to find a company that seems to have the smart, seems to have a good history, seems to be good with their money. In the past, they're very smart, and also they have a business that you feel will be very very resilient for a contracted economy where a lot of people out of work and maybe salaries are down and things like that. And take your time, don't rush into it. If you're making a 4 year investment, there's no rush at all. Take your time, and think it through. And maybe when you start making your move, don't go in all the way. Maybe you want to buy a little bit and then see how things go, and then a little bit more, and then over time, you just want to make sure you buy as much as possible before the price moves up too much. But I don't think there's any concerns there. It's gonna be taking some time. Long term, all the way. Yep, absolutely. Uh, what are some of the stocks? Looks like a new subscriber there. Baz, what are some good stocks to invest? I don't know. I'm not. There's nothing in particular that I'm looking at right now. I mean, I Ford did catch my attention. It's one of the lower, share prices, and I look at where they were before, how much they've fallen. Some opportunities there, but I don't know how much I trust Ford. I know Ford has been having some issues. I know the automotive industry has been having some issues. Um, this contracted economy, I don't know what that's going to do for car sales. I think the used market is probably going to have a boom. So I don't know. I don't know. It's tricky. So I don't have anything right now to recommend. Let's see all messages. Si there's any more questions. Question. Question pour vous. Good stocks to invest in. Shipping industry is booming. So that's an interesting point. I would wonder about they're booming now. Will they be booming in the longer term? Will they be booming 6 months from now, 12 months from now? Um, and I guess more importantly, again, it's about resilience in terms of can do they have the strength to ride out through what's coming next, which is again people holding on to their cash, people being very conservative with their spending. So don't just focus on what's happening now. Focus on what can be happening in the future, and I mean, you gotta look. If you're doing long term, you gotta think long term, right? So you gotta think how will things now affect them? How are they doing now? 6 months from now, when we start opening up, you know, 12 months from now, when we start opening up the businesses, but people are holding on to their cash. How will they be in that time? How will they be after 2 years of uh, more reserved sort of spending in the public? So try to, in your mind, project 6 months, 12 months, and see what are your instincts telling you about how the particular business will be doing in those times. No one can predict the future, but you know, um, you need to make your best assessment. But these are the things that I think you should be thinking about when you're making those assessments. How will they do through the different phases of what's to come? If there's no other questions, don't invest in Wyndham. All right, guys. Thanks for watching. Enjoyed the video. You know what to do. Click on the like button, subscribe, and everyone be safe. I know it's a very challenging time. The only advice I could give you guys, other than obviously follow the social distancing, follow the recommendations of scientists, not so much the politicians and greedy folks. Other than that, sunlight is your friend. If you don't have a, you know, backyard and stuff like that, try to get in those windows, get that sunlight however you can. Also get that mentality of being locked up. If just sitting by a window where you can see outside, you're seeing trees or something else other than your house is kind of I think can help you mentally. Um, you know, stay in contact with friends and family, exercise, and just try to have a positive attitude as best you can, and be creative. All right, guys, thanks for watching.